What's happening, traders? We're going to talk about breakouts today, more particularly false breakouts, how to spot the end of the momentum of a breakout so you can get out for profits, you can ride the wave up, and more importantly, squeeze every penny you can out of the stock market. So I want to pop on to tradingview.com and you'll be able to see Tesla today. So Tesla had a nice gap up. We're looking at this with our trading group and it just missed us. We missed every single entry point possible, unfortunately. You can see from this candle, we just stamped higher for the first 3 minutes and we were gone. So looking at this, it's very hard to chase. You can see this was my level. If we crossed over this level, you could see that that was going to be a breakout. So we gapped up and we crossed over this level right here. But how do we play it? What do we look for once this happens? That's the more important question we're going to be answering in this video. So all those secrets are going to help you guys utilize the stock market. So let's bring back time. You can go to the replay feature and do this, but I was charting this with the group and I was basically showing them that this line was developing and this is everything you need to play the stock market. When things are going up in the market, they'll typically hit a top and come back down. So this line was our trend line that we were watching to see if we got over or if we sold off and traded beneath to fill this gap. We ended up crossing over the trend line and holding. So let me show you what was showing up on the market mover indicator. So this indicator is my personal indicator we give to our traders. This shows you the sell signals in the market, and we stamped so high on Tesla that we were at an extreme sell signal. So this gives us a lot of pause to take this trade and a lot of worry to know if this is going to go higher and higher. But as the market developed, we'll just click play and we'll show you kind of what was happening here. So first candle, next candle comes up, next candle comes up. You can see right here, we're starting to come back and retest some levels, but we don't end up retesting the breakout zone and we get higher readings on the market mover. So if you're looking at a breakout, the key is you want to make sure you're going higher with price action and higher on your indicators. So RSI, market mover, you want those to be going higher. If they're not, that's where you should kind of get nervous and get worried if this trend can go higher and if you should be holding what you got or find an entry point. So right here, honestly, that was the discount. I missed it by about $50 with our traders and it was off from here. So 10 points in Tesla was 50%. That was 709 and we're looking at a 10-point move in just that 3 to 6 minute candle. So here we are, we keep trending higher, and now here's a key moment of what you could do in the stock. So now that we have produced our high over here and our next high over here, we don't know if it's going to rocket higher, but we do know, there's got to be some resistance right here. So I'm going to plot that line and we're just going to watch it as price action develops. So this is how you really analyze a breakout correctly. You have to make sure it's going higher and higher, and as it hits highs in the market, you can plot that as a trend line and use it for a place to possibly take profits or as a place to maybe get in. But this is a great profit taking line. You can now see the indicator is making lows when the market's going higher. This is our first indication this breakout is getting weak, but we don't play against the breakout. We just look for entry points with it. You can eventually play against it if you start breaking key levels, and that gap fill can look tasty if this thing doesn't trade sideways. So I click play again and you can see retesting candles. So retest levels, and we still haven't really gone anywhere yet. You can see the market mover indicator is going higher. Click it again. You can see sideways, popping, sideways. A lot of sideways action. And at this point, this could be your entry point because we're looking at 722. The only thing holding us back, and this is one pause for a breakout, one reason breakouts don't work, is this is called extreme divergence. And this is what happens when the indicator goes down as the market trades sideways. So I'll throw on one indicator I really like, which is the EMA clouds. So this is just one key thing. If you want to play a breakout, if you want to get in on the drop or get in on consolidation, the green EMA cloud is usually killer for that. So as you can see here, I would have been trying to scalp this for a small win, but you can see this divergence is setting up for a possible consolidation or reversal. So I don't see this being a huge move on Tesla today. And let's keep rolling through. And you can see right here, we have our uptrend line. We can Control C, Control V, copy, paste, and draw our channel. And we have just broken the channel. So this is starting to get dicey at this point. So if you're trying to scalp Tesla and trying to get in on the last couple dollars, it's getting dicey. So the best entry point was obviously down here at the EMA cloud touch. At this point, you can draw the top in the market at the wicks here. And if you double top, that typically is your entry point for puts if you have your exaggerated divergence down here. So this is scalping on a smaller time frame. You can use larger time frames, but this is kind of like a surgeon's play here. If you're really fast and you can manage it, this is a good downside setup if we hit 726. So let's just see how this theory holds up. As you can see, exaggerated divergence is our pause in the market, and we're just going to see if we can get over this. So again, if you're scalping, entry point on the EMA cloud bottom, you do have about almost a 10-point move. So again, 10 points is 50%. 50% is a good risk reward there. But you can start to see the market mover is going sideways. We are not pushing any higher. So the exaggerated divergence is just going to accumulate here. So again, we start to flatten. So this is the next key for a breakdown. So as you can see, that line I drew, which is called a double top, you have one top here, one top here. That double top is producing the sell-off. So underneath this EMA cloud now, our target is this bottom EMA cloud now. We're looking for a move down to 715 in the SPY, or sorry, in Tesla. And I'll just put where our target is. So if you're playing a breakout, what you want to see is higher highs, plot the trend line, make sure it's going at it, moving towards it. If it stops at any point, you make that high in the market resistance, and you play any move to it as a reversal if you have divergence. So you can see my indicator auto programmed in this bearish divergence. It also auto programmed in hidden bullish divergence at the exact moment I was telling you that EMA cloud bounce. So right now, this is setting up for a breakout that most likely will fail. And you see that from that divergence. So let's just go through this. You can see another touch and a sell-off. So there's your second entry point for puts. That was 725, and we got 721 getting hit. So 4 points is not enough to get excited. It's only 25% return, and we're looking for that move to 715. Boom, 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 boom. And honestly, I haven't even looked at this chart. I don't even know how it plays out. We were just looking at it this morning, but this is really working out. So there's 720. At the low, we hit 718. We're getting close to the 10-pointer. So again, we're looking at that blue EMA cloud bottom as an entry point. So here we are, too many inside candles, too sideways. We're probably going to pop higher. You can see this market mover is coming down while price action is flat. So for this thing to come down while price action is flat, I don't think we get that next leg down, but we'll see. So I'm looking for another pump to 725. Nope. We actually hit the price target perfectly. Who knew? I honestly didn't look at this. But yeah, that was the move right there. And that was how it played that breakout reversal. But at this point, it's not worth it to take this trade to the upside all day long and expect a gap up tomorrow, because we've already come off the highs so much. So at this point, we're hitting the blue EMA cloud. The market mover is flattening out, double bottoming. We might reverse back up to 725. And here we go, 720 coming in. Trading sideways. We might hit 725 again. Here's 722. And let's see if we reverse off of it again. And the only reason I'm playing the consolidation is just because this market did not produce any higher highs or any lower lows on my indicator. But I think you get the picture. This is a breakout that didn't truly fail. It's a breakout that held, and we'll show you how to plot the support levels. The Fib retracement levels are super important. So you could take this on the gap down, or you could take it here. If you plot the 50% retracement level to the top of the move, you can see the 50% retracement is around 712. So we haven't touched it yet. We bounced off the 30% retracement once. We're using it as resistance now. If we were to Fib retrace from the prior day's low, now you're looking at it a little differently. You got the 30% retracement being the exact bottom of the day for this move here, and you got the 50% retracement being kind of the first 3-minute candle open. So you can use these levels to know if it's make or break. If you start giving up Fib levels, that's when you know this move is likely to reverse. So I just want to do one more breakout day in Tesla and just walk you through exactly what we'd be thinking and how we'd be trading it. So the prior days did not punch higher like we did today. So the bad thing that happened on Tesla today was this extreme sell signal. We just cannot get future moves from that because it's so extreme. The prior day here had a weak sell signal and continuation. So that's how we would have known that breakout would have been worthy of continuing. So what I'm going to do is plot the high of the prior day, and I'll just put on extended hours to show the difference. The high of the prior day is right here, and once we break that in Tesla, that's where we want to look to get the breakout and run. So you can see, just as I plot this, that the high of yesterday actually served as your retest level. So when you're looking at an entry point in a breakout, you really only want to take it on a retest. And you really want to hope you're correct and really hope that retest holds, because a typical good breakout will not run to the moon like it did on the first example. A typical good breakout will make a small move up, and it will get a small sell signal on the market mover and try to get some normal readings. So we come down here for our entry point and we hold. So what you're looking for is a couple other confirmation pieces. One being the EMA cloud has to be green. You want to get things at the EMA cloud support levels. So that was a great confirmation support at 682. And you can see Tesla rides right up to resistance that we plotted previously, comes back down to blue EMA cloud, rides right up to resistance, comes back down, rides right up to resistance. So this is what we call an all-day breakout. And from what we see on the market mover indicator is divergence. So we are diverting on this line. So here's one high, and you can see the next high here, the next high here. Those three highs produced lower lows, lower highs on the indicator. We do not want to keep holding our position when we see that. So once we see the reversal from there, we typically want to take position off and wait for our hidden bullish reading. So hidden bullish is a great entry point. If you're taking a breakout, you're looking for the hidden bullish. If you're looking for breakouts to fail, you're looking for divergence. So this breakout was starting to fail, but it just wasn't as an extreme enough reading to really get that turnaround. So this is a low, a higher low. Higher lows are bullish. Here's the first low of the day. You see the high on the indicator here, the first low, and then the lower low. Hidden divergence is the opposite. So this drop in the indicator, but the higher reading here produces a possible buy signal, and it's called hidden bullish. So if you're looking to take a breakout to run, you really need that hidden bullish. And for a breakout to really continue, you need things to happen that produce higher lows and higher highs. So you can see the whole day in Tesla, what we ended up doing is producing higher low, higher low, higher low, higher high, higher high, higher high, higher high. We will only fail in a breakout when we cannot produce a higher high and we cannot produce a higher low. That's when we get nervous, and that's when we take position off. The prior day breakout, let's just analyze this last one and just go based off high lows and lower highs. So let's plot the highs in this one. Here's a high, here's a low, here's a higher high, here's a higher low, here's a higher high, here's a higher low, here's an equal high. So if you can't make a new high, breakouts will typically start to fail, turn around. You do see the bearish divergence show up right at that point perfectly. And what you see is your first lower low. So this is your lower low. If we look at it, this is the lowest reading on the indicator from the day. We can see it's also higher from this low. So it's a higher low from the first low. So we know this is hidden bearish or hidden bullish divergence. Although it didn't show up on the indicator like that, that's a great place to possibly get in. Only if you're supporting EMA clouds and only if you're supporting those upwards indicators. Those are things you guys can figure out on your own, but it's a 10 moving average, it's a 15 moving average, it's a green EMA cloud. Those are all places for us to get in and ride the trend. You can see here we went over the high of the day, producing a higher high, but the indicator produces an equal high. So for a breakout to continue with success, we need higher highs on the stock and higher highs on the indicator. It didn't happen, and what you see is a sell-off to the later in the day to the equal low from previously. So that didn't work out. You can see we rejected double tops. Typically when we make a high in the market and we sell off, consolidate, the next high is going to be very tough to pass. That's going to be our point of resistance, and that's going to be something we're going to struggle to get over. So this was just a slight high there. We spent a couple candles over and it did not hold. And if we go back, we're just going to use this strategy one more time on this breakout day. So where's our first lower high or our first lower low? Here's an equal low. We do not like equal lows. That means weakness. Here's our first lower high. So lower highs, weakness. This is our first equal low, weakness. This was your moment of weakness in Tesla. From there, what we see is a lot of selling off and a lot of consolidation. So down here made a new low, made a lower high from here. Again, new low, lower high, bad. If you just played off lower highs and higher lows, you'd probably be a profitable trader. Here, lower low, you can see lots of lower lows and lots of lower highs. So this is just our bear trend developing. Even the indicator goes down consistently on each low, validating the bear trend here. The highs in the market actually produce a lot of resistance too. So Tesla here just did not look good, just based off higher lows, lower highs. Pretty simple concept, pretty easy trading strategy. Hopefully you guys enjoyed it. Videos to the right of me on more technical analysis, more charting to make you better. Enjoy them and enjoy your day. Peace out, traders.